Andrea Heng here. I want to take you back to an episode we did last year that introduced to you the concept of ETFs or exchange traded funds. Our guest in that episode, Yap Jun Rong, he used an interesting concept to describe ETFs. He likened it to Yong Tau Fu. One bowl with a variety of tofu products, meat, and vegetables. So like Yong Tau Fu, an ETF is essentially a single investment basket that comprises different assets like stocks and bonds. So on the Money Talks podcast today, we want to take that basket further. Quite literally, you'll see what I mean. Because while some of us are familiar with ETFs that are available in Singapore, there are actually a lot more opportunities beyond our borders. But with those opportunities come new questions, new complexities to think about. For example, what are the risks involved in investing in overseas ETFs? Well, to break it all down for us today, we have Gerald Wong, CEO and founder of Beansprout. Welcome back to the podcast, Gerald.
Thanks so much, Andrea, for having me back again.
I'm so excited to talk about this with you. So it seems there are more pastures outside of our own. Singaporeans can actually invest in ETFs listed outside of Singapore. So tell us how that works when it comes to, the trading windows. I'm thinking about the time zone already.
You earlier described ETFs like Yong Tau Fu. I think basically when we go to the food court, we can not only choose Yong Tau Fu, but a lot of other meal options.
That's right.
So that's really how I think about the available options for us as investors, in that apart from exposure towards, say, Singapore stocks, there are ETFs or exchange traded funds that give us exposure to US stocks, to Japanese stocks, to bonds, or to different asset classes. And that allows us to gain exposure to these different sectors or markets in a diversified way. So that's really how I think about it, in the same way that we can gain exposure to selected US stocks, we can also think about gaining exposure to some of these sectors or markets through ETFs as well.
Okay, so the ETF for you is a food court. So what about the trading hours, the accessibility? What's that like when we invest in an overseas ETF?
So, for example, in the US, there are a significant number of ETFs that are listed there. What this also means is that in terms of the time that these ETFs may be trading at, they may not actually be during Asian hours.
Okay, yeah, that's a tricky part here. So we have to be mindful about trading, what time we trade our overseas ETFs?
Okay, we generally would suggest investors invest in financial products for the long term. So in this case, the trading hours should not be something that you're staying up late till 3:30 a.m. in the morning to be trading in and out of these ETFs. But I think generally, if I'm looking at the US trading hours at this point in time, they may start at 9:30 p.m. So for investors who are looking to put in their buy trades, that might be something that they need to be mindful about. But I think apart from the trading hours, the more significant thing that I would consider would be the currency exchange risk.
Yes.
Because once we start to put our money into overseas markets, we then need to think about whether there can be changes in the currency that can effectively affect our total returns from this investment.
Okay, and is investing in overseas ETFs generally more expensive in terms of, all these other charges and fees as well?
So if I were to look at how we can gain exposure to these ETFs that may not be listed in Singapore, I can actually buy it in the same way that I am buying a stock or ETF that's listed in Singapore through my brokerage account if it offers exposure towards the market.
Okay.
In terms of the fees, it is effectively relatively low cost compared to, say, investing in mutual funds, because the expense ratio of the ETF, which actually just tracks the index, is typically lower than for a mutual fund. So effectively, some of the costs that are then involved would be the brokerage fee that you may have to pay, and that is typically something that has been lowered over the years with the many new platforms that have actually come up.
Okay, you mentioned Japanese stocks, you mentioned US stocks, you mentioned European stocks as well. I mean, how do we exactly access these stocks as an investor?
So, for example, if I am looking at gaining exposure towards the 500 largest US companies. That can be through the S&P 500.
Right.
And I just have to find a ETF that tracks the S&P 500 index.
I see.
So in this case, what the ETF would try to do is to get as close as possible to the returns of the S&P 500 index. And in this way, I can gain exposure towards the top 500 US stocks in a simple as well as low-cost way.
Okay, and there are so many ETFs out there. It is overwhelming. I'm starting my own ETF journey now, and I'm really wondering, okay, how do I go about choosing which ETF works best for me? So, for example, if I'm looking at a basket of obviously S&P 500 stocks, but I also want a basket of European stocks, for example, right? How do I make sure that that ETF is going to have all of that in my basket for me?
So I think this is where understanding what the ETF actually tracks is important. So some of the key considerations would definitely be number one, the credibility of the issuer of the ETF, because I want the issuer to be able to be there when I want to be buying and selling the ETF, be able to track the index in an efficient way.
Right.
And that is where the track record of the ETF issuer becomes helpful to understand whether they are able to do so. Next would be the expense ratio, because like you mentioned, there are many different ETFs that may be tracking an index. And I think one of the key reasons why we want to be investing in ETFs anyway is that it is low cost, and hence the expense ratio is something that I'll be looking at to make sure that I am not paying very high costs to gain exposure towards the S&P 500 index.
So, what then becomes the difference between investing in ETFs via Singapore platforms and overseas platforms? What are the pros and cons?
So I think at the end of the day, it is really the same considerations I would have with regards to any financial product.
Sure.
So the first is your investment objectives, the second is your risk appetite, and the last is your time horizon. So just to give an example around some of these different considerations, naturally you have a wider selection of ETFs that might be available in the US market. Because many of these ETFs might give you exposure towards different sectors, the question that I will ask myself is, am I targeting the very high return that may effectively come through from some of these growth companies? So that is the question on the investment objectives.
Okay.
But typically, when it comes to something that offers a potential higher return, it typically comes with higher risk as well.
Of course.
Yes.
Yeah.
So that is the question that I'll then ask myself as to whether I have the risk appetite to be able to stomach some of the volatility that may come through from investing in some of these ETFs that may move around a lot more compared to something that might be more stable. So using what happened actually just a few months ago as an example,
Okay.
when Trump actually announced the tariffs, that would probably be a good example where we actually see that some of these ETFs that offer exposure towards growth sectors might actually face a more significant decline when there can be macroeconomic developments that affect investor sentiment.
Yeah, I think that's a very good point, trying to peg it to the news as well, because try as we might to separate the two, I think the two have become more and more intertwined these days, especially when it comes to funding in the private sector also, right? I'm curious also, Gerald, at this point, right, when it comes to choosing an ETF that's suitable for us, be it based in Singapore or overseas, should we also be looking for flexibility? For example, if I want to be more liquid at a certain time, you talked about time horizon there, and that got me thinking, what about some flexible features of an ETF? Should that be something we should be also thinking about?
So one of the benefits of an ETF is that it is something that offers investors flexibility because it is traded on exchanges, so you can actually get in and out fairly easily.
Okay.
So long as you have access to your brokerage account, if the ETF is fairly liquid, then you can actually enter and exit when you wish to actually do so. I think then the question around the ability to get in and out easily would then be around the liquidity of the ETF.
Correct.
And this is where typically we see that for some of the ETFs, especially the very popular ones, tracking the S&P 500 index in the US, are actually very liquid. and that means that you can actually get in and out of these ETFs in a fairly easy way.
Okay.
But on the other hand, if you're looking at a very niche market or niche asset class, that is where I'll be looking at whether there is sufficient liquidity for me to get in and out of this ETF, because you may not actually want to be holding on to something where you'll find it difficult to exit eventually.
Okay, that's a good point. I mean, it's also reassuring, right, that we don't always have to lock it in an ETF. So if I want to start looking overseas for ETFs to invest, I mean, where do I even begin? I mean, we talked about the basic questions, our risk appetite, which indexes we want to track, etc. But we're sitting at the computer right now. What's our first step?
So something that we always share at Beansprout is know why you are investing, because even before you go and set up a brokerage account, put in your first trade, I think first and foremost, you need to know why you're actually doing it.
Exactly.
So I think, for example, if I understand that, okay, I want to do this for my retirement savings, I may be someone with a fairly long time horizon and I want my money to compound over time, then from there, I will narrow down the options of the different financial products that allow me to be able to then achieve such investment objectives. So for example, if I have decided that, okay, what I want is something that has historically grown at a higher pace compared to, say, maybe the Singapore market,
Right.
I'm willing to take the currency risk. I have a longer time horizon to be able to ride out maybe some of the short-term volatility. And with that, maybe I've decided to invest in the S&P 500 ETF. Then the question is, which S&P 500 ETF do I invest in?
Yeah.
And which platform do I then perform the investment trade to be able to gain exposure towards this ETF?
Okay, those are a lot of questions, but very important ones to have. So you really need to sit down and not just clickety click. It's not that easy. Okay, so what's the difference between buying, for example, an Ireland-domiciled ETF, so an ETF that is based in Ireland, versus buying those in the United States? Because I'm hearing some people do that as a sort of hack. Can you explain what's going on here?
So I think this is really going into something that is fairly advanced.
Okay.
It's a question that we get quite often, especially when it comes to investing in ETFs in overseas markets. And I think it is something that investors may also have to think more significantly about when they actually invest in US ETFs. I think it is something that many actually just do when they hear of friends investing in S&P 500 and looking at the historical returns, but not knowing some of the implications that come through from that. So one thing that we always would like to highlight would be the tax considerations. So earlier we mentioned investment objectives, risk appetite, time horizon, but there's one additional element when it comes to investing in overseas products, which is then tax.
Yes.
So I think there are two components that would relate to tax. The first is the dividend withholding tax, and the second is your inheritance tax.
Okay.
So the dividend withholding tax would be that in Singapore, when we invest, we get dividends from our REITs, our banks,
Right.
our STI, without thinking much about it because these are actually not taxed.
Okay. So you don't have to pay extra.
That's right, yes.
Right.
But when it comes to investing in overseas markets, the different jurisdictions may then apply a withholding tax on the dividends that are paid out.
Right.
So in the US, this may be 30%, and that is something that you would then have to take into consideration. Effectively, that will then potentially lower your net returns when you invest in these ETFs overseas.
Okay.
So this issue around the Irish domiciled ETFs then came up because they offer you the same exposure towards maybe the S&P 500 index, but because they are domiciled in Ireland and are traded on the London Stock Exchange, the withholding tax on the dividends is actually lower at 15% for some of these ETFs.
Okay.
So what this means is that if I'm then looking at the net return from these ETFs, if everything else is constant, then you might be able to get a higher net return with the ETFs that are domiciled in Ireland.
What's the catch, though? There must be a catch because it cannot be that, because otherwise, if it were the case, everyone would just go and invest in an Irish domiciled ETF, correct?
Yes. So that's a good point, and goes back to the point about Yong Tau Fu in that there's no free lunch in the world. So you're right to always ask about what's the catch.
Yeah.
So I think in this case, some of the other considerations that I'll bear in mind is the point I raised earlier about liquidity, because in the US, that is where the underlying stocks are. That is where the largest pool of the ETFs will be in. So effectively, you have a higher liquidity in the US ETF versus the Irish-domiciled ETF. So that's one point to consider.
Okay.
The second point is really in terms of the trading hours, which is something that we discussed earlier, in that because this is traded on the London Stock Exchange, it officially follows the trading hours of the London Stock Exchange. So the consideration here would be that if there is a very significant development in the US during US trading hours, and if you want to get access to this ETF during US trading hours, you may not actually be able to do so if your ETF is actually trading on the London Stock Exchange.
Unless you're willing to sacrifice sleep and wake up at 3:30 in the morning.
That's right, yes.
Yeah.
So I think then if I want to be performing the buy trade or sell trade, I would then have to perform it during the trading hours of the London Stock Exchange. So that would be another consideration apart from the liquidity.
Okay. That's a good explanation there. When I consider buying an overseas ETF, right, should I be looking at the conditions of that particular country or particular region? I mean, there are a lot of things that are going on in the world. We hear the terms uncertainty, instability a lot. Is that something that we need to also consider when we are making our overseas ETF investments?
Definitely, yes. So I think especially in today's world where there is a lot of uncertainty, we have seen a lot of movements in the foreign currency exchange rates. So that has actually impacted the net returns that investors are able to make if I were to then consider it from a Singapore dollar perspective. So sitting in Singapore, we are lucky that the Singapore dollar has been very strong. If you go to Japan, if you go to some of the other markets for your travel these days, you're actually a very happy traveler because of the stronger Singapore dollar.
Yep.
But if you were actually investing in some of these markets and then trying to bring your money back to Singapore dollar, you may actually then feel the pinch in that then the real returns that you're actually looking at may not be as high as what the return in the foreign currency might have been. So I'll use the Japanese market as one example.
Yes.
Because, for example, in the last few years, we have seen the Japanese market reaching new highs. But then, effectively, given the weakness in the Japanese yen versus the Sing dollar, when you then translate this back to Singapore dollar, what are the total returns that you then get may not be as high as what you may see when just looking at the index returns.
Okay.
So this is something that is important if the investor is based in Singapore and want to have their assets eventually denominated in Singapore dollars.
Right.
So if I'm thinking of this from my retirement savings perspective, it is my Singapore dollar value that really matters to me because that's what I'm going to be spending on.
Exactly. In my retirement, right?
That's right, yes.
Yeah.
So then that might actually then impact how you do your financial planning because of the fact that effectively I need to make sure that the returns I'm getting is in line with my objectives and targeted returns in Singapore dollar term and not actually in Japanese yen or in, say, Hong Kong dollars.
So that brings me to my next question, right? How do we know it's the right time to buy an overseas ETF? I mean, you talk about currency being one of those key factors. I mean, if the Singapore dollar weakens a little bit and the yen becomes stronger, would that be identified as an opportunity to add an overseas ETF in my portfolio?
So something that I've always shared is that the time in the market is more important than timing the market.
Yes.
Okay, I think that is because even for a lot of the professional investors, it is very hard for them to have the crystal ball to understand how some of these global developments can potentially impact the total returns. So using, once again, what happened over the past few months, if you were trying to time the market and get in at the bottom or if you had sold actually because of the uncertainty brought about by the Trump tariffs, what you may actually eventually encounter would be the upside that have come through when the markets actually recovered as some of this uncertainty actually subsided. So I think for a lot of investors, ETF investing is something for the long term, and with the power of compounding, that is typically where you will see your money actually grow with time. But that actually requires patience and also requires you to have the emotional ability to understand that maybe it might be difficult to understand when the Japanese yen might be the weakest, when the US dollar might be the strongest, but actually to do it on a consistent basis. And I think with ETF, you can actually do it through a regular savings plan, and that effectively takes away the emotional burden of making some of these difficult decisions, even for some of the professionals.
Yeah, I think patience is key, and I also think, not overthinking it is a good piece of advice there. I think you don't have to be too overwhelmed with the details sometimes. So thanks, Gerald, for reminding us of what we should be thinking about.
Yes, so I think the good thing about ETFs is that they offer a simple way, a cost-efficient way for us to start investing. And hopefully that gives us more time to really think about the deeper questions around why we are investing, because you already have the product that makes it easy for you to do so. And hopefully that frees up more time for us to really understand why we are investing.
Yeah, absolutely. And hopefully our viewers and listeners have found this absolutely helpful as well. Thank you so much, Gerald, for doing this.
Thank you.
So I'm sure this has been completely and tremendously helpful to our Money Talks community out there. Drop us a message if you have any questions or feedback, as always. Money Talks is available on Apple Podcasts, Spotify, YouTube, and on Me Listen. Rate us where you find us. Special thanks to the team as well: Tiffany Ang, Nat Fetavero, Junaini Johari, Joanne Chan, Hanida Amin, Saya Wind, Shaza Dalila Rahmat. I'm Andrea Heng, signing off for the Money Talks podcast.